Yo, what is going on, guys? Full trading strategy breakdown video today. It's been recommended multiple times by people asking me on TikTok, and then I also just wanted to make one anyways. So let's get straight into it. First thing I do is I jump onto the daily time frame and the 4 hour to establish my high time frame bias. Are we printing lower lows? Are we printing higher highs? What type of higher time frame PD arrays are we reacting out of? What my draws of liquidity are? Why? Basically, just what direction I want to see market go to, so I have some sort of edge. Then using the 15-minute, 30-minute, 1 hour, 4 hour, I find my draws of liquidity, whether that is a 4 hour fair value gap, a 4 hour low, a 1 hour fair value gap, 1 hour low, etc. I'll then, with market open, head over to the lower time frame and look for a rejection block to form off one of these higher time frame PD arrays or liquidity sweep. If you have both, it's better confluence. So for example, if we come down, if we're bullish, we come down, tap into a 4 hour PD array, form a 5-minute rejection block from it. That is exactly what I want to look for. Then I want to look for a manipulation leg away from the rejection block that formed from the PD array and or liquidity sweep. If it lines up with the golden zone with the Fibonacci tool, which I will show, then it's a better confluence trade. It doesn't have to. If you still get the manipulation leg away, it retests the rejection block. You can still just enter off the rejection block or set your limit order at the CE of it. If it aligns with the Fibonacci tool's golden zone, no more confluence, obviously it's better. And then for me, this is something personally I do. Obviously, already, if you're experienced reading this, you'll notice the Powell strategy, the Powell model. I just make a few tweaks to fit my own trading strategy. But if I see the setup and want to take a trade before 10 a.m., I'll de-risk and risk around 150 a trade. And then if it happens after 10 a.m., we get a retest of the 10 a.m. level or the rejection block forms with the 10 a.m. candle. I'll be willing to risk a little bit more because the confluence is that much higher. And then I'll use the target I want to 6 risk to reward. But then a lot of the times it'll be like I'll take a profit and then I'd get stopped out. Instead, I think what's smarter is to target the closest draw of liquidity, take a partial there and start trailing your stops. So let's get into an example of what it would be. So I'm going to use this day right here, Wednesday, the 15th of July. I remember this day specifically just because I remember it was a really, really clean setup, super clear, very easy. It's going to be very easy to teach. So what's happening here? We have a daily fair value gap that just got inversed to the downside. And then we also made this low because it is a bearish candle followed by a bullish candle. So this is a low. So I'll definitely be bearish on this day. We've inversed a daily fair value gap. Yes, we may have came back up through it on the next day. However, it just created the low for us to target on a new day. So this would be my draw of liquidity for the day, right here, because we inversed. I'll then head over to the 4 hour, another draw of liquidity here. We've got a 4 hour low that we could target. I would then look on the 1 hour. Same thing applies. 1 hour low, just below a 1 hour fair value gap. So this will be, again, very high confluence. Then we've got these stacked up low resistance draws. We've got another 1 hour fair value gap here to target. We've got more 1 hour lows to target. And we pretty much swept all the draws close to us that I wanted to see with the manipulation up in the previous day. So pretty much all of my draws were bearish. All I was seeing all day was bearish. Then jump onto the 30-minute. Not necessary now because I've seen all the draws that I need, but still, just for some extra confluence, we can do that. Then finally, I normally wait on the 5 minute with market open after establishing all my draws of liquidity. One thing I always make sure to do as well is mark out true day open. So this was a Wednesday, so I'll be looking at the Wednesday midnight open. Already got swept, then we reacted to the downside from it. So I've got all my draws of liquidity. I'll then be heading down to the 5 minute waiting on market open. I've got this 1 hour fair value gap I want to target, this 4 hour low I want to target, this 1 hour fair value gap to target, and then eventually this 4 hour low as well. So market open. We'll look for a reaction out of a PD array. Got two 5 minute fair value gaps stacked on top of each other right here. We get a candle come up, fully retest the entire fair value gap, and then form a rejection block out of it with market open. Then mark out from the high of the rejection block to the low. The golden zone sits at the rejection block, so I'd slap my limit order right there. Stop loss at the rejection block, much bigger stop than normal with this strategy. Sometimes you can put a 10-point stop, but then if I was to do so in this scenario, I would have got stopped out as it was coming up to hit the CE. Once it's hit CE of the rejection block, I'm normally quite happy to move my stops to CE because it's unlikely to retest it again. But you could then hold this entire move till the 1 hour fair value gap I marked out. It dumps straight there for a 1 to 7 RR. You could have then held it to the 4 hour low. Could have then held it to the you could have then held it to the other 1 hour fair value gap. Obviously, most people are not going to be in a position for that long. This would have been a 25 RR, but this was also like a 2.5 hour long trade. If you just wanted to get in and out, target the first big draw of liquidity, could have just targeted the 1 hour fair value gap, take your 1 to 6 RR and get off the charts for the day. I think this is a pretty clean basic setup. It doesn't always happen like this, but this is a very good example. Obviously, if these 5 minutes were 15-minute or 30-minute or 1 hour fair value gap, it'd give more confluence. And also, if it was past 10 a.m., it would be a lot better. But you can see here, 10 a.m. 10 a.m. opens here. We get a manipulation leg in the opposite direction that we want to see. It then comes back down, retests the 0.62 range, and then keeps flushing, which is again what we want to see. We want to see with 10 a.m. open, a manipulation leg in the opposite direction, and then a dump. So even if you wanted to wait till 10 a.m., you could have taken it with 10 a.m. But this looked too good to not take it when I took it a few weeks ago. Because it was a pre-market trade, I would de-risk and use 150 because 10 a.m. off taking trades after the 10 a.m. manipulation gives them higher conviction and confluence. Because this was before 10 a.m., I would risk a little bit less because it was with market open. But pretty self-explanatory, clean setup. One quick point I see people make mistakes of. This is a bearish rejection block because the candle closed bearish and we mark out the bearish body of the wick, not the bullish move. And then a bullish rejection block would be run right here. We sweep out a low, then we make a bullish candle, and the bullish wick is rejecting. It would look something like this. That would be the bullish rejection block. And then using the Fibonacci tool, you would measure from the high to the low for bullish candles, from the low to the high for bullish candles, sorry, and then from the high to the low for bearish candles. Hope that was enough explanation. If some things didn't make sense, you want some more explanation on it, let me know. I'll make a video separately just for that.